Hey guys, Chuck Barone here. Wednesday, July 13th, 2022, CPI Day, a big day in the market, a big day for all of us who are investors, who are people living in this country and want to keep going and have a good, healthy, wealthy life. A lot of information to go over with you guys today, a lot of reports coming out, a lot of vital stuff you guys need to know. Before I get into all that, first I want to thank everybody for being here, for your support for the show, for all the times you viewed the videos, liked it, shared with your friends, for all of your comments and questions. Ask Chuck Barone is just going bananas, guys. I really can't tell you how much I appreciate it. It totally fires me up and makes me want to do a better job for you guys every single day. I'm getting to the markets today. It's a crazy day with CPI coming out. I think the market kind of stunned by the numbers. Stocks were down across the board. Not in a big way, marginally. Actually, they did a little better than I thought they were going to do today. I thought that, this jarring CPI number would cause stocks to really crater today, and they kind of held their own a little bit. They were down, but not down as much as I thought they'd be, so apparently there are still buyers in this market. I don't know who. I certainly wouldn't be, but they're there. In the bond market today, more St. Jerome miracles. This guy's incredible, really, and what they're doing to this bond market is beyond belief. The 10-year down to 2.90. The still an inverted yield curve, actually getting wider between the 2-year up here and the 10-year down here. This bond market really looks peculiar to me, and I don't think this is going to end well. We're going to see a giant spike coming up soon. I'll get into bonds a little later in the conversation. The dollar was a little bit softer today, but not really, basically unchanged, sitting at roughly 108 on the dollar index, putting massive pressure on metals, on commodities, and on foreign currencies. The metal market down today was up slightly, very marginal. Gold sitting at $17.35, silver about $19.30. Nice to actually see an update in the face of this dollar sitting at 108. Remember, guys, when you see these numbers in the dollar index go from 108, 107, 106, getting down back to normal, you're going to see a little bit of a rally coming up in metals here, so hang in there, guys. Oil, terrible day today. Flat market, numbers not looking good. Just over 96 per barrel for West Texas crude. Natural gas is really on a roll, though, up 7% today. Big fear in Europe, of course, with the Russians going to shut the gas off over the winter. A lot of our viewers from Germany are telling me that it's the only thing they're talking about in the entire country. So natural gas is having a big run up, and I think we're going to continue to see that, especially if the threat becomes reality. Bitcoin, just under, let me see, I just read my notes here, just under 19,700. Updated day, not much, a couple $100. It looks to me like there's a new trough, a new trading trough for Bitcoin between about 18.5 and 22. It's going to stay in that range a little bit. Look for a breakout either way to get a little bit better idea of which way Bitcoin is going. Moving on to the news today, as everybody probably already knows, the CPI numbers came out and they were appallingly bad. 9.1% year over year. Banana Republic numbers, ridiculous for a country like the United States. It's triggering all kind of craziness. And I've been bear with me today, guys. I got notes like crazy. I want to go through all of this stuff with you guys briefly. So the CPI came in at 9%. Core inflation was up 0.7%. And that's just comical because typically what the Fed does in a situation like this is they point to core inflation. And they say, well, food and energy are volatile, but look at this, core inflation down here was actually down a little bit, so we're getting a handle on it. Uh-oh, didn't quite work out for you guys, did it? With core inflation numbers up. Next report coming out, real wages for workers, down 4.4% year over year. It's a 15th consecutive month of downward wages. which kind of blows another story there that, wages are putting the pressure on prices. I think that, it's going to take a little bit of a conversation point away from them with wages going down like that. Consumer sentiment, the Michigan report came out. Consumer sentiment is now at a 50-year low. People are not feeling good about this economy. They're not feeling good about the way things are and looking at the future, and they're seeing it not getting much better or maybe even getting worse. Consumer sentiment numbers are important for markets because they give you a little bit of an idea of what people are thinking, and when you know that, you can kind of predict the way they're going to behave. I think we might actually, hopefully, if people can afford it, see a spike in the savings rate in this country, which would not be a terrible thing. We had the B of A guys coming out today saying, uh-oh, we see a recession. Really, B of A? Where have you guys been? In the very first show we did here, back in our inaugural day back in June 16th, we said that a recession was coming and probably was already here because we saw negative GDP for 2 consecutive quarters. The first quarter already in the books, second quarter coming up at the end of the month, confirming. Looks like the mainstream is either catching up with us or being willing now to admit it. So this has really come a long way, guys, from transient inflation, peak inflation. No, we're back to transient again. It's the supply chains. It's wage growth. It's going to be tough inflation, but it's not going to be a recession. Well, if there is a recession, it's going to be mild. It's going to be shallow. And now we're looking at everybody agreeing that this is not going to be a good recession. It's going to be a deep one. It's going to be painful. We have so much stuff today. Strong dollar. The dollar now is starting to hurt foreign economies. Since everything in the world is priced in dollars, when the dollar is super strong, well, other currencies have to use more of that currency to convert into dollars to buy oil, commodities, and other things of value, hurting those economies now. Everything's costing more. And it's going to create a situation, I think, where you're going to see those countries want to gang up a little bit on the dollar, or even the Fed, at the behest of our corporate overlords, because strong dollar is not great for their international businesses either, trying to do what they can do to bring this dollar down. We have the petroleum reserve. Now I was reading this, it was just mind-blowing to me. As everybody knows, President Biden Carter has released a whole bunch of oil out of our strategic petroleum reserve, trying to bring down the price of oil. How's that working, guys? Now I was reading that 5 million barrels were actually exported, even to China. China, who's buying their oil dirt cheap now from the Russians and circumventing all the sanctions of everybody else. You can't make this stuff up, guys. Everything's off its rocker, everything's out of kilter, and everything's kind of spiraling. It's just all going to spin into this big climax coming up. The Fed, talking about their core inflation, it's just great. They're like, well, don't worry, guys. It's just your rent and food and gas going up. But look, this core inflation number is hardly moving at all. Look, electronics are a great deal. You can get a great deal on a big screen TV. Matter of fact, it's Amazon Prime Day. Get your credit card out. Go, go, go. Spend money. Buy something. Debt trap stuff. Debt trap stuff. That's what they talk about. It's just insane. Instead of looking at it what it really is, bad policy, they want to spin it into anything but that. Craziness. Just crazy. St. Jerome, insane now, right? He's going to, as we've been talking about, he's got a Hobson's choice of raising rates to fight inflation, which will tank the economy, or supporting the economy, which will make inflation go even crazier than it is at 9.1%. Tough choice. The big question is going to be, I think everybody's in agreement. I think there was some softening on the July rate hike. The Fed has already announced they're pretty much planning on raising it, 3/4 of a point. I think some people were believing they were going to back up on that. I think everybody believes now that they probably won't. I'm thinking, depending on how the rest of this month goes, they might even bump that up to a full point increase. I think that that would be a shock to the market, but I think it would be great for this inflation fight, and not a terrible thing for savers either, who might actually get to earn a little bit of money on their savings. The fourth straight month where the actual inflation topped their estimates. It's happened so quick. I mean, all of this stuff in this economy and we're seeing right now has all been blindingly fast. In real estate, the bubble popped pretty quick here. All the indicators are lagging and they're going to just start catching up. Job losses are imminent. It's going to be bloody and brutal. Real wages going down, down, down. Actually, today's was the worst report since 2007. Well, guess what happened in 2008? Declining wages are not great for the economy. Maybe it's a little bit of foreshadowing. If it's not wages driving inflation, it's not demand, because people are making less, have less spending power. What is causing this inflation? What could it be? How about crappy policy and flooding the economy with dollars? How about that, guys? Let's say the truth for a change here, right? In the same article, they said persistent inflation as well as a still robust job market. Really? Robust job market? Yesterday, Loan Depot announced 2,000 layoffs. On top of the 2,800 they already did, basically cutting out more than half of their company. Microsoft announcing cuts. Facebook's been in the news announcing cuts. Companies big and small are starting to shed excess workers. The unemployment numbers are going to start to change. You're going to see big spikes coming up. And it's just another lagging indicator that's going to catch up. And when people see what's really happening, well, it's going to be too late for them. But the good news for us is we're ahead of the curve. Wages falling for 15 straight months. I don't know how that drives demand for employment. We had President Biden Carter again today. He saw these numbers, so he figured he better come out and say something. So check this genius out. Quote, "Inflation is unacceptably high, but the data is out of date." Unquote. Really? Today's report is already out of date? How is that possible? I mean, they insult us to our faces every day, insult our intelligence. They think we're all idiots. Today's report is already out of date. So, I was reading that said 18% of Americans now consider inflation the number one problem facing the country. This is now the start of entrenching inflation, which is the Fed's huge fear. It's where inflation ultimately becomes a self-fulfilling prophecy where people really believe it. This is the highest number on inflation being the number one problem since 1984. In 1981, at the peak of the last inflation, the number was 52%. And I think we're going to see numbers that high coming up before the end of the year when people can't believe that this inflation is still here and getting higher and higher. In the 70s and 80s, into the 80s, we had a thing called the misery index, which talked about costs of stuff, lack of jobs, lack of real paying jobs, wages going down, and all the stuff we're already enduring here. We're going to see a return of the misery index, even if it's just here. Now, guys, what we have happening in this recession, I always try to use an analogy to kind of give you a visual to kind of understand it. Picture a volcano erupting. First comes little bursts of gases. It starts to let everybody know that this big eruption's coming. And then comes kaboom, the big one, where the whole volcano erupts and it collapses on itself in a lot of cases like Mount St. Helens did. That's what we're having. We're seeing these little boom booms. Pretty soon comes the big one, and everything is going to change for everybody. Another interesting little tidbit too. I saw that coal is on a roll right now. Germany thinking about firing up their nuclear power plants that they were thinking about shuttering or have shuttered. Coal going up. There might be a little bit of run in coal. I think everybody's trying to prepare now for this natural gas cutoff. Strange doings all around the world with the geopolitical crap not making anything else any better. The good news, I try to end with a little good news today. You guys have known all of this stuff is coming since we started this blog and before on others. You know what's here, you know what the future is going to be, and you know what you should be doing to protect yourself from that. We've been harping on it here since the first video we put out. Save as much as you can. Try to save 10% of your income. Live, if not frugally, thoughtfully. Spend what you need to spend, but don't waste money. Be thoughtful, be careful. Know that this money could be used down the road for something important for you. We've been talking about investing your money conservatively. Guys, right now, it's not about returns. Forget returns. Right now, it's safety, 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 protect your principal. The only way you get hurt investing, truthfully, is if you get greedy, man, and you reach. That's how people get hurt in this market. Anyway, that's it for today. I don't windbag you guys for another 20 minutes on this stuff. We're going to go over a lot of this stuff in a little more detail tomorrow as I break all these notes down. If you haven't already, subscribe to our Substack. That way you make sure you get our video every day. If you like the information you're getting and you feel like the channel is useful and the information is useful, please hit the like button. Share the video with your friends and subscribers. Your comments and questions, keep those coming, guys. You guys are super cool about that. And I love sitting at the end. As soon as this video goes, after the premiere, I sit right down to get on those comments and questions. If you haven't already, subscribe to the channel. Make sure you hit the notifications. Check the bell. Make sure you get those notifications daily. If you're already a subscriber, check it. Because a lot of times viewers have been telling me they turn off the subscriptions. Double check. Make sure you're subscribed. Make sure you got the bell checked. Let's get those notifications out to you guys. I appreciate the views. I appreciate your support. We're going to have a lot more about all of this tomorrow. Until then, guys, have a great day. Thanks.